Hi, good afternoon, everyone. We'll just wait for a couple of minutes as people are joining, and we'll then start. Hi, good afternoon, everyone. Thank you for joining this webinar on recent developments in the GST law. Let me first, start with saying that we are again in the difficult scenario of the third wave of COVID, and I hope everybody is doing fine and well. Be safe and take care. Moving on to this webinar, again we have a situation where a series of amendments have been made in the credit rules, and there are certain other amendments also which we would like to talk about. The idea of doing this webinar is that these amendments have some very serious repercussions on the credit that we have been taking until date. So we have a situation of credit for the past period, and we have now a situation of what happens to all the credits on a going forward basis. There are certain things which companies need to clearly think about in terms of if they take, if there is a service that they've availed or goods that they've purchased, is that credit sacrosanct? So, and what steps do they need to carry out to ensure that tomorrow that they don't get into a legal tangle merely because the supplier has not filed its returns? With this, I'll just let Ruturaj drive this entire presentation, and we'll do it in the form of a discussion where we will pick up some key burning issues and sort of try and address some questions that we have heard from the clients on this aspect. Ruturaj, over to you.
Yeah, thank you, Ritesh. Good afternoon, everyone. So today, like Ritesh mentioned, we will be talking about the key changes. We've broken the key changes into three parts. One is key changes related to input tax credit. Second is changes related to compliances, and then some other changes that are becoming effective from 1st Jan 2022. We'll begin with the most important changes, that is changes with respect to input tax credit. But before we get started, we have one poll question for all our participants. Can we please have the first poll question, please? So the question, as you can see on your screens, is on what basis do you avail input tax credit? Is it GSTR 2A, 3B, 2A plus 36.4 or invoices? We'll give it 20 seconds and we'll have our poll results. Can we have the poll results, please? Okay, so as we can see, it's fairly mixed bag. We have uh, ITC being taken by participants in different manner. Some of them are taking, 17% are taking on the basis of 2A, 48% are taking it on the basis of 2B, and balance are taking on the basis either of invoices or following Rule 36.4. This, I would say, precisely is what is happening across industry. Divergent practices really are being taken in order to take input tax credit. This was in a way also possible because the way in which the legal provisions stood as of 31st December 2021. But the manner in which you will be taking input tax credit will undergo a change on a go forward basis. With that background, let's take a look at what has changed. What are the change which has happened in the CGST Act as well as CGST rules. Section 16, which talks about conditions for availing input tax credit, originally had four conditions. Only on complying those four conditions could you avail input tax credit. Those conditions were: one, possession of input tax, possession of an invoice or a debit note raised by the supplier. Second, actual receipt of goods or services on which credit is being taken. Third, payment of tax to the government by supplier. Four, furnishing of GST returns. These were the four conditions which were there till 31st December. Now a new condition has been introduced, and that condition requires that in order to take input tax credit, details of the invoices or debit notes on which input tax credit is taken are reported by the supplier in his outward returns, which is GSTR1, and are also communicated to the recipient in terms of section 37, which is essentially GSTR2B. So in other words, if you do not have a particular invoice reported in GSTR1, your customer will not be able to take input tax credit of that. This has now become a condition for availing input tax credit. Parallel changes have also been made in GST rule. So 36.4 earlier, which is a rule which provides cap on input tax credit. Earlier, originally the cap was 120% of matched credits, which eventually came down to 105%. So in terms of the rule earlier, you could take 5% extra credit than what is your matched credit or what is the credit appearing in 2A to B. Now this rule has been substituted and it is synced with the new amendment in section 16. And the revised rule 36.4 says that input tax credit will be available to the extent debit notes or invoices are appearing in GSTR1 and are also reported uh, and communicated in GSTR2B. So there was one dilemma as to whether one should follow GSTR2A to B. All that has now been clarified, and unless your invoices are appearing in GSTR2B, you will not be able to take input tax credit. So clearly, a rigorous or a onerous condition has been incorporated in order to take input tax credit. ITC can be availed only if it has been reported in GSTR1. And now there is no room for availing any additional credit. So the way earlier we could avail 105% credit, 110% of match credit, now that room is not available. Certainly, this rule will have a lot of impact, a lot of practical issues. But before we get to the practical issues and challenges, it is also important to look at what were the earlier provisions, what have been the legislative development on this front, And more importantly, what is the legal standpoint for defending unmatched credit? Ritesh, can you please throw some light on these aspects?
Yeah. So, Ruturaj, you already broadly summarized, what were the provisions during the journey of the GST law. Interestingly, if you trace the legislative history from the day GST law was introduced, there was this entire concept of provisional matching of credit. So you could take credit under Section 41 on a provisional basis. And then Section 43A provided for a mechanism of matching of credits. And then there was a joint and several liability between the vendor and the recipient, where if the vendor does not pay tax, the recipient has to add it to its output tax liability. Now, we all are aware that the provisions never got truly implemented because IT glitches, etc. The reconciliation never sort of, came out properly. There were circulars which were issued in the past in 2018, which says that matching is not a mandatory requirement of law. Now, what happened thereafter is the Rule 36.4, which sort of came out of nowhere to say 20%, 10%, and 5%. And then we suddenly have a GST at 2B, which is trying to indicate that what payments have been made by the supplier once 3B has been filed. Now, if you see the provisions of Section 16, which is subject to 41 and 43A, clearly the provisions never got notified. 43A never got notified. There is only a rule which says under Rule 36.4, which says that credit ought to be disallowed. So there is clearly a lack of a substantive provision which enables you to do any such reversal, or for that matter, to add those disallowed credits in your output liability. The same stands for Rule 36.4, though on a very cautious approach, many companies have started following 36.4. But if somebody were to sort of question and challenge 36.4, let's say the amounts involved are significantly large, in my view, there is no legislative basis by which the department can raise a demand. Now, having said that, what we are seeing today, despite that there, and clearly the recent amendments under Section 16 bring out very subtly that these provisions have just been introduced with effect from January 1. They are not retrospective in its applicability, nor wisdom they have been made prospective. The provisions were lacking earlier. Now, what we would clearly see is, as you would have all noticed, a lot of ASMT 10 notices have been issued for 2017-18, where they are asking your GST basis GSTR 1 3B, that is one difference. Another, they are asking basis your 2 a reconciliation. So whatever credit that have not matched, a demand is being raised, and if you're not responding to that ASMT 10 notice, a DRC 01 is being issued, which obviously, if you are not able to explain, will culminate into a show cause notice. So what we are going to see is a huge number of show cause notices and a good amount of a legal war on this mismatch credits, where vendors have ultimately ended up not paying tax.
Right.
On a very legal basis, this could be challenged in the courts of law, because I do not expect the authorities below to appreciate the provisions, because they are raising the show cause notice, they are going to raise the demand. We do not have a GSTAT in place. So the most likely outcome of this notices would be that they will have to be challenged in the red court, where the amounts, obviously you will have to look at the amounts in question, etc., and take a cost benefit analysis. But where the amounts involved are significant, you will have to go and challenge this in the red court. There is clearly a very good case to argue that mismatch provisions do not apply until the point in time I've satisfied the conditions of 16.4 in terms of invoice being there, services being received in, and have taken credit properly, the credit ought not to be disallowed. This is one legal aspect. The another legal aspect is this entire debate on genuine bona fide buyer. So Delhi High Court judgment in Arise India. This is a VAT dispute which is already going on, where there are positive judgments to say that if you are a bona fide purchaser and if you can prove that, then irrespective of whether supplier has paid or not, credit should be available. Now this also applies to post amendment. We'll see how it evolves post amendment. But under the VAT regime, these conditions were there, and those line of judgments are also there in place.
Sure.
No.
On this note, we have one more poll question for the participants. Can we have the second poll question, please? Can we have the second poll question, please? Yeah. So the question, as you can see on the screen, have your organizations received AMCT 10 notices for mismatch between 1-3B or 2A-3B? We just, in line with what just Ritesh mentioned, we just wanted to understand that, what is really the representation industry? How many of you have already received notices? Yeah, can we have the poll results, please? So as we can see, almost 60% of the participants have already received ASMT 10 notices. And as Ritesh mentioned, there will be a legal battle. This I'm assuming would be for 17, 18, 19, perhaps. Again, for 19, 20, 2021, for that matter, up to December, these notices will be coming in. And to a certain extent, they may be defendable because the law provisions up to 31st December were different than what we have coming from January. So there is a legal battle for the previous period, and that call will have to be taken depending on what numbers are really there, as to whether you should really reverse that credit, whether you should go to the rate route or appeal against those demands.
So, Ruturaj, one interesting point that I would want to highlight is one is, of course, the litigation route that we are talking about.
Yeah.
Another is also, to my view, there is a need for a representation to the government to say that, look, until this particular amendment, the reconciliation provisions are not tight. There are issues and this would be litigated. So should there not be a consideration to say that prior to the amendment, all the past notices where the documentation is available should be dropped, because end of the day, it's just going to turn up into another battle up to Supreme Court where the SEC actually could win in this case. Clearly, there is no substantive provision.
Right.
So
Right.
companies should also sort of pick this up with association to see if representation can also be made for the past period. One is, of course, you keep fighting, but other is also to represent the issue very strongly.
Absolutely. Absolutely. But now, I mean, up to December 31st, we know there is lack of clarity. But going forward, right, from 1st Jan 2022, I think it's absolutely clear that input tax credit, which is not backed by GST or 2B, cannot be availed. Now, on that note, Ranjeet, now that it is abundantly clear, this position, what do you think would be the key challenges or basically impact of this, this change on the suppliers, the recipients?
Thanks, Ruturaj. I think there are quite a few points of impact. Maybe not adverse, really speaking, but there would be an implication for all of us as we go about, receiving services and goods and have invoices to book. So, as your slide sort of describes it, the first one would be a cash flow impact, because any amount of credit ITC that is delayed is in effect going to mean a cash flow impact for me, right? In the outward side, I would have a adjustment which I could not make because of the non-availability of such ITC. It may be for whatever reason, but the ultimate effect of that is there is a cash flow impact. So that's the foremost sort of implication that we will all see. Uh, there is a impact in a nuanced way of this very point itself, is that there would be a timing issue, a timing difference because of this particular sort of requirement. So if my vendor is actually able to book the invoice in good time, and let's say as you've given on the illustration, that the supplier raised the invoice on 25th and he reports it immediately. Okay, then what is it that I have done is, at the receiver side, I have maybe taken a time lag and I have not booked it immediately. Then it's gone in the GSTR 3 2B of the previous month, whereas I am now looking to take the credit in the subsequent month. Now there will be a mismatch, there will be a time lag, and I may have a reason for doing so, because I want to be sure that I have paid him. I want to be sure that he has booked it, reported it, and everything else is taken care of. So that gives rise to, again, a time lag issue, not by any other reason but my own doing. So that cannot be attributed to anybody, but it is an implication nevertheless. The other aspect is, now going forward we will have to have a very clear demarcation of what is the credit you're taking, and that reconciliation, so to say, has to be at a granular level, at an invoice level. There are several sort of organizations or taxpayers who have gone about it on a gross basis, who have gone about taking credit on a lump basis, and therefore use the rule in 36(4) as well, where you take the 20, 10, and now 5%, or until now 5%. But going forward, you mentioned this earlier as well, there is no ability for us to do that any longer. It will have to be a line-wise reconciliation. There's no choice there. The other aspect of it that we will see is that for quarterly filers who are, the invoice filing furnishing facility, those who are in there will be some amount of a mismatch that we will see in those cases as well. The one large point and footprint of this particular amendment will be that my vendor, my supplier, is compliant, but he invariably is a little late. So instead of doing it on the by the 11th of the next month, he makes the filing by the 12th of the month or the 13th of the month, which means that my credit is impacted, and that again gives rise to a cash flow impact. So the first point that I mentioned, it sort of will have different ways in which it will throw itself up at us, which is a cash flow impact for the businesses. The last one that I talk about is the credits that arise in the import stream or in the reverse charge mechanism, or then even as ISD credit. Now, these typically will not really be something which have been reported in or auto-populate in our GSTR 2B. Henceforth, there will have to be some sort of a mechanism where we showcase this reconciliation if and when a sort of question is posed to us. It is also, in fact, I think there is an expectation in some quarters that the board will clarify that the import credits, the RCM credits, or the ISD credits are actually not meant to be impacted by this particular set of amendments. And so this credit is pretty much as you pay it, you take it because you've generated the invoice and challan, and you're able to enjoy that credit without a hitch in that way. So these would be the points I think we have to all now be conscious of as we go about, in the new regime.
Absolutely. One connected question to, and this is, I think, on the minds of many taxpayers, that the amendments that we are looking at have become applicable from 1st Jan 2022. Now, I have a situation where my December GSTR 3B will be filed during Jan 2022. So the question that I think everyone is wondering right now is that whether these changes that we're talking about, whether they are applicable for the month of December, that is the December 3B, or they will actually come into play when or at the time when I'm filing my January month's 3B. So any inputs on this particular aspect?
So, Ruturaj, I think this is a very ticklish point and question, which you rightly identified is on most taxpayers' mind. And I will also request Ritesh to, step in at the appropriate point of time. But let's analyze it like this. Here's a provision which is substantive in nature. Okay, it is effectively adding to your conditionalities of taking credit and enjoying credit. So how does my section 16.2 begin? 16.2 basically says, or 16.1 and then 2 says that you can take credit in respect of your businesses. Now, when you take that credit, it says, hold on, before you go forward, these are the conditions I would need you to meet. And one of those conditions, which is now effective 1st of January 2022, is that this amount or this sort of ITC that you're proposing to take is actually part of a return and communicated to you, which your vendor and supplier has provided. So that's a significant amendment or an introduction of a condition which is substantive in nature. It's not procedural in nature. Now, once we agree that it is substantive in nature, then unless there is something in the law which suggests to me that it has to have a prospective effect, a retrospective effect, then the only logical sort of conclusion that flows out of it is that it applies to the time period or the tax period beginning of 1st of January 2022. And if you attempt to take it and give it an effect into the past, it may seem fair, it may seem proper because you're filing a December 2021 return in the 11th of Jan or in the 22nd of Jan, as the case is. And therefore, it must apply even there. But I think that may be a bit improper in the way we see the law. As I said, it's a substantive provision. It should be looked at as prospective in nature. Having said that, I think we should be conscious that this is a benefit that we are taking in the law, because that's the mechanism allows us to take the beneficiation of credit. And when you're enjoying that credit, perhaps it may be better to be more cautious and therefore apply it even from the December returns, which you will file physically or electronically in the month of January. So to say that the returns for December, if you are able to, as a business, give effect to what is there in the amendment, it will be, I think, in everyone's benefit that you apply it in that fashion.
So, sir, let me supplement to what Ranjeet has said. Let me take a couple of examples. So let us assume that you go ahead and file your December returns on 31st of December. You don't file it in the month of January. So does that mean that my legal view changes merely because my date of filing the return has changed? See, the point is that while we file, the due date is January, the returns are always for the period of December. And here I'm not talking about the invoice date. What we're talking about is the month in which the credit has been taken. The invoice date could be August, September, October, doesn't really matter. It is about when you claim those credits. And when I claim those credits is month of December. In fact, when you pay the tax, correct, and your provisions of section 50, which is again supportive, to say that I pay the tax, even if there is a credit which is available, there is no interest imputation. The law recognizes that it is an interest for that particular month of December, and therefore this provision was introduced to say that you don't pay any interest because you have a credit balance. Take another example where October returns, let us say September, October returns, you've not filed until date, and you go and file it in January. Merely because you are a delayed filer, does it mean that section 16 provisions would be applicable to you? So as Ranjeet rightly mentioned, it is a substantive condition of law. It is not a procedural aspect that if he doesn't report the GST invoices in the returns, what it says is a credit will simply be disallowed to you. That's the law. And can that law have a retrospective impact? Because it's common. So as on 31st December, I've taken credit in my books. The law requires me to file, gives me a leverage of 11 days to file the return. Merely because the law has changed, does it disentitle me to credit which are already there in the books till 31st December? In my view, the answer is, the answer seems to be that no, it applies from January return. Yes, on a cautious basis, people, and if time permit, because sometimes the volumes are very large and people who are not falling annexure to B, and I've seen a large quantum of those which are not falling annexure to B. They are 2A or even people taking credit on the basis of books. This is not a very simple thing to do, the entire reconciliation. So probably, people who are already aligned may on a conservative basis go with December. But otherwise, if tomorrow there is a legal dispute, in our view, it should be defendable. And let's hope that there is a clarification again which is issued on this.
Absolutely.
So I just want to maybe take the slightly other perspective on this also, and I am with Ritesh on this point of hopefully there will be a clarification, because otherwise it will just give rise to a lot of views prevailing out there and a lot of disputes reaching the non-existent tribunal. Hopefully it will come up, which we'll have to deal with. Oh, my date is so and so, but my service date is so and so, but my goods receipt so and so, my e-way bill date is so and so, and now my credit in 2B shame on so and so, and I filed return on so and so. So 6-7 sets of dates have to be seen, and matter after matter will be in the tribunal where they say, okay, what is your this date, what is your that date, and then matters are getting disposed on that silly little issue that we have. But the perspective that I wanted to sort of bring out is that in certain decisions, the Supreme Court has also said that I have to look at the credit and test it out at the point of time of its availment. So what it means is that 1st of January onwards, whatever credit I take, it must have met the test which is given in 16(2)AA. Therefore, it should have been part of the return and it should have been communicated to me. Now, just taking it in a, as I mentioned, this is the other perspective of it. And the example I'm sort of trying to put across is that invoice was issued, let's say, in November or December, and ultimately I'm taking this credit in, let's say, February of 2022. For whatever reason, unfortunate, my vendor has not put it there, and until such time that I'm going and getting this, taking this credit, it's not put there. Now, based on this principle that the Supreme Court has laid down, that you test for the credit as on that date, okay, which is, let's say, the month of February in my example, my vendor has not uploaded it. Am I now going to be able to stand up and say that I am aligned with the provisions of the section 16.2 and I should enjoy this credit? Or I'll have to wait and say that no, let me get this vendor in line, get him to first get his uploading done so that it is there in the 2B. And because I am taking this credit in the month of February, although it pertains to a supply and an invoice of pre-December 31, 2021, the conclusion is I will have to sort of abide by it. I mean, that's also a thought process which is, out there. And I think we have to be alive to that.
Agree. Agree. So I think while December is only 1 month for which we have to, think whether I need to follow this or not, and there are the views that we just spoke about. But going forward, for sure, this is something which will have to be followed. And given the challenges or impact that Ranjeet you have put out, Ritesh, what do you think are the practical action points or steps, or for that matter, process changes that should be looked by taxpayers in order to make sure that their credits are optimized or they're not losing out on their credits?
So, Ruturaj, this is something which is not new, which I think companies have been alive to the fact that there is need for a reconciliation. While the legal provisions never sort of came into play, and there is a legal lacuna in terms of challenge to the provisions, but I think most of the companies are aware of that there is a need for a reconciliation. Now, the question is the degree of that reconciliation varies. So in terms of when do I book my invoices in my books of accounts, when do I carry out, what is the periodicity of carrying out that reconciliation? What is the kind of automation that I have introduced? We are aware of situations where credit is simply taken basis in book. We saw that poll, right, where credit is being taken in the books, basis the books of account. We have seen the poll where people are not following 36. Now all of that goes away clearly, as we discussed. So there is clearly a need for companies to come out with a process of monthly reconciliation, because you can only take that much which is in 2B. So one approach is you just pick up the 2B credit and move ahead, and you don't have to do anything. But at some point in time, you will have to also reconcile whether all the credit invoices that I've booked. So you will have a system where I have made entries in my books of accounts. The 2B has not appeared. The 2B has appeared. I have not made entries in the books of accounts. And then you have to again bifurcate between eligible and ineligible. Right. So as a process, what we suggest is, and which is being operative in many companies, is that there is a ITC control account where all credits are being dumped, not taken, they are being dumped. ITC control account is again state-wise. Then you decide on the eligibility of credit. How do you decide on the eligibility? Basing the matching, reconciliation. So reconciliation has to be an automatic process. Now, there are large companies with huge volumes. It is not possible for you to carry out those reconciliation manually month on month for multiple states across the country. So there has to be a system whereby the reconciliation happens. There has to be a reverse integration of that reconciliation into your ERP, which is now possible. We've done this for many clients where the matching report gets incorporated into your ERP, and basis which a system entry gets passed from the control account to the GST credit eligible account. And then there is a control account which is all unmatched credits, and then you reconcile those unmatched credits. So on the unmatched credit, you on the control account, you actually perform three functions. One is 180 days reversal. You do an eligibility analysis and you do a RICO analysis. That is primarily how your control account functions. And once the credit is eligible, you pass it on to an eligible credit account. So your 2B always matches. And when I say always matches, means of course you have exceptions like your reverse charge, you have exceptions like your import, etc. At any point in time, one is monthly reconciliation. At any point in time, you also have to keep that reconciliation ready in terms of 2B versus books. So those 3 items which are there, which doesn't form part of your 2B, because those requirements are going to come from the department. Immediate notices, they're all system-driven notices. It's not manual. So they will come to you to say that explain the difference, and you will have to go and explain the difference. This is one part of what you need to do in-house in your company. But then there is another angle which relates to the vendors. Right now, vendor is not filed the return. So one approach which companies are adopting is withhold all the payments, GST payments. Right now, there the challenge is again it will be a reconciliation nightmare which you should be prepared with, because once you withhold the GST, multiple reasons because of which matching doesn't happen. Sometimes invoice number is not put properly. You might have filed the returns. So you will have number of vendor follow-ups to say that I already filed my returns. Why is my tax not being paid? And sometimes we have seen in companies it gets escalated to the top management, and then there is a fire from the top management to say that why was this vendor not paid? There are critical vendors. So either you withhold GST as a process. Again, it has to be automation. It can't be manual, and you would face challenges with that automation. Let me tell you upfront, because your invoice detail will not exactly match always. Other is you do an ABC analysis, right? You divide what are critical vendors and what are those. So there is this entire many ASP GST providers now do a vendor due diligence and vendor rating. So when you onboard a vendor, do a vendor rating, vendor due diligence, rate the vendor and put them into an ABC in terms of what you think where it should be, whether I should withhold GST or not withhold GST. On a lighter note, we will always be a vendor. So our GST should not be kept on hold at any point in time by our client. And the last point is whether December, whether January, of course, companies will take their own call depending upon the quantum involved. But one major exercise that they will have to do is the credit for the past period. Some taken on the basis of book, some taken on the basis of 36.4, some taken on the basis of 2A. The entire reconciliation until date will have to be carried out, so that you clean up the past and then sort of you move forward. That is clearly something which needs. So while legally there are grounds available, etc., but notices will come. You will have to prepare that data in any event. So be ready for it with that data.
Ritesh, I want to, particularly just ask you one practical aspect is a taxpayer has taken an enjoyed credit in terms of 36.4, which is the 5%, concession that they've taken. Now, what would be your suggestion or, recommendation? Do you reverse that 5% and then move forward to take the credit on a matching basis? Or then do you take that amount of 5% and look at it as how it reconciles and then take the remainder of the credit?
So Ranjeet, 5% was allowed by the provision which was then existing, subject to the legal challenge. Right? Law allowed me that 5%. And there's no provision for reversal of that 5%.
So the question is reversal from a convenience point of view, not because the law requires me to do so, but as a matter of convenience. So I then will not have to get into a unnecessary amount of reconciliation. I'll simply just erase that 5% and start it afresh. It's just a matter of how some people are looking at it.
We have been in situations where that 5% is such a substantial amount that companies have taken it for the past cumulatively. So I don't think so anybody would want to leave that cash flow. Assuming for a moment that people are ready to reverse and law doesn't ask you to reverse, I highly doubt that those benefits which have already been taken would be. Yes, there is an issue because 5% has been taken on a gross basis. Not nobody has done it on an invoice basis.
That's the challenge. That is truly the challenge that we have to try and get a fix for.
Yes, but see, when people had taken 5% on that gross basis, even then reconciliations were not done. Yeah. So what is even the 5% quantum, is it sacrosanct? That is another, because what happens is you've not taken 5% credit. Let's say your credit is 103. So you've taken the entire credit. And then you've not sort of, maybe there is a working available to say this much is matched and this much is non-matched. So it's not going to be as easy as simple, but 5% enjoyed can clearly, they can continue to enjoy. And these are large amounts that I've understood from many of the clients. So I doubt that anybody would be willing to give that cash flow away.
Yeah.
But need for reconciliation for the past period is definitely there. Notices are going to come. And see, one interesting question is, I have taken credit on 5%, right, for some of those invoices. and those invoices will not now get reported, let's say at a later date, where I will take full credit. So what will typically happen is, in many situations, you could also have a situation where your 2B is higher actually. So and you don't end up the only and what you are saying only makes sense where people have not done reconciliations, because you should not end up taking excess credit by mistake.
Yeah, that I think is a given, that if you are in excess credit, there is a problem. So that has to be avoided at all
Excess
costs.
credit by the sense that let's say somebody follows a practice, whatever comes in annexure to be, I'll take credit.
Yeah.
Please be mindful that for that annexure to be reporting, you might have taken 5% credit already.
Yeah.
That is where the catch is. That is where companies have to, and nobody has done invoice wise 5%. That is what my understanding is.
Yeah, I think we are going to see a lot of different set of facts and a lot of different situations, and we'll have to deal with them as they come.
Yeah, and quite a few action there that everyone has to think about. Like Ritesh, you mentioned most of the action points that we're seeing on the screen were something which was known the minute 2A was introduced, or that stage. All those action points were thought of, but practically there was sort of liberty which was being exercised by most of the organization in following these action steps, and I think that liberty now is not there on the table anymore.
Ruturaj, somewhere we are responsible because we only given a legal opinion that
Yeah,
there is. But now I don't think that anybody would be giving that kind of a position to say that. So
true,
now it is not a matter of discretion; it is a matter of compulsion.
true. Okay, moving on. Now, one more substantive condition or other, one of the concerns which I think has been there on minds of many taxpayers is that one of the substantive condition in the GST law, or in order to take input tax credit, is that the tax on the invoices or the tax on goods or services should be paid to the government. Now, by far, there has been no mechanism wherein the recipient can really find out whether tax on a particular invoice has been paid or not. So there are so many times there are scenarios where an invoice is reported in GSTR 1, but tax on that is not paid in 3B. So reflection in 2A or 2B cannot even be a conclusive proof that tax has been paid. So that discrepancy has always been around. Ranjeet, do you think that now with the changes which have been incorporated as far as GSTR 1 and 3B, which we will discuss now, do you think that this discrepancy gets addressed in any way?
Rituaj, maybe I can't say that the discrepancy gets addressed, but I think there is a mechanism to ensure that that discrepancy doesn't arise into the future. So hopefully, we won't have that botheration that whether the tax has been paid or not by virtue of these set of provisions which you are now going to, sort of describe.
So Ruturaj, let me put another perspective to this entire provision, because companies are looking at this as a very large draconian provision in a way. So what is happening is today GSTR 1 and 3B mismatch is for multiple reasons, and this has been extensively been debated. So let's say, for example, I have got an excess tax paid and I adjust it in 3B. Let's say I have a DRC 03 liability which I have paid which does not match, and I adjust it in 3B. Those kind of adjustments are all there in 3B, and there will always be situations where 1 and 3B will not match.
Right.
And the concern, and there is an instruction which has been issued, but again, that instruction, while it says that opportunity should be given, and there's no statutory provision which tells that you have to give an opportunity. It's an instruction, and you are aware the status of clarifications issued by the central government not being followed by the state government.
Yeah.
So you could see a scenario where the state government authorities might even not even bother about this instruction.
Absolutely.
So there is a lot of worry, and that is where people are, what is being represented is, there are two aspects to this entire representation. One is 1 3B mismatch, incorporate a statutory provision for proving the difference, right? Number one. Number two is, now that you've incorporated this provision, don't come to the recipient for credit reversal if it is appearing in 2B, right? I can't verify tax payment. Once it comes in 2B, that should be sufficient compliance. You go and recover from the supplier under these provisions.
Okay.
Those are the two things which are being strongly put across by the industry to say that, if you want to do this, give us an opportunity, statutory provision. Don't leave it to the whims and fancies of the officer. Number two is to be should be sacrosanct now. Once I match to be, no notices should come to me. I just wanted to highlight these discussions which are happening across.
All right. So yeah, so in a nutshell, I think we can look at this change which has come in, which talks about mismatches between GSTR 1 and 3B. The provision says that if there is a mismatch between GSTR 1 and 3B, wherein the liability reported in GSTR 1 is more than liability reported in GSTR 3B, the recovery proceedings can be initiated even without a show cause notice. And as Ritesh mentioned, that this worry which was there, that if I have genuine scenario, that for several reasons which Ritesh mentioned, that I can always have a genuine reason for a mismatch between 1 and 3B. I think that instruction sort of clarifies, or at some level puts to rest that the worry that whether I'm going to get recovery proceedings every time there is a gap between 1 and 3B. But I think what this provision in a way requires is that if everyone has to do a reconciliation between GSTR 1 and 3B on a regular basis. Ritesh, on this particular aspect about making sure that GSTR 1 and 3B are in sync, are there any practical aspects? Are there any processes that you think that can be brought in or introduced by the taxpayer?
See, in my view, your 3B cannot be prepared independently of GSTR 1. All the software which are available actually makes your 3B basis GSTR 1. Now, only the issue is that people have been using this as an opportunity where, make some adjustments, etc., report invoices in GSTR 1. But logically, and after e-invoicing, it becomes more difficult. Logically, your 3B should always be on the basis of GSTR 1. And all the softwares today actually create that provision where your 3B gets created on the basis of GSTR 1.
Right.
Also, Ruturaj, just one more aspect of this entire thing, which has been strongly put across, is to say that give us the provision for revised return. So, like you said, difference between 1 and 3B. One client actually typed for 50 lakh instead of 5 lakh on the GSTR 1. And there are multiple scenarios which we witnessed, right? Where by mistake you reported excess tax. Mistyping of a number. They are large values. So what? Do you have a recovery notice? So one aspect is why is there no provision of revision of returns? You are not allowing me the opportunity to rectify, and then there is a recovery provision under this GSTR 1 3B, which also talks about self-assessed tax and attachment provisions, which have been made up, which Ranjeet will deal upon shortly.
Sure.
So there are while this is to, and which is also the official statement of CBIC, that this is to force suppliers, but this in a way also has huge repercussions where this would be used as a mechanism by authorities to sort of raise notices and demand tax.
Right.
I think one aspect that we should also consider, and in the positive sense, is that there is a provision in 16.2 which says that the tax has been paid. As a taxpayer who's the receiver end, you have no real mechanism. Okay, there is no tangible way in which you can go about and find out that has the tax that I paid to my vendor gone to the government kitty or not. In my opinion, this provision is a step in that direction. Why? Because it simply says that if that vendor is not vigilant and is not taking the necessary steps of having first reported something in one and then having gone under the radar, then he will have a problem. There will be recovery consequences which will immediately trigger, which means that I know the government has made a step here, a provision here, to ensure that the flow of money of the tax is coming into their sort of coffers. But what it does for me is it enables me now to have that slight amount of peace of mind that the amount of tax that I've paid is going to land up there, because if not, then the government is going to go and chase him down. So in one way, what I've seen in section 16.2c as a condition is, in a manner of speaking, addressed by this particular provision. And in that sense, I think it's in a positive direction.
Right. So the only disconnect, Ranjeet, over here, which I would like to highlight is there is no statutory provision which says that once this particular provision comes into effect,
You're right.
tax authorities are not going to come and recover tax.
No, I completely agree with you, but I'm saying I'm looking at whatever is the silver lining in this.
Yeah, no, I completely agree. There is a silver lining, but we need to understand which one is more worth, the silver lining or the.
Yeah.
Yeah, yeah.
But I think it is very, very clear that given this amendment now, it's very important that all the suppliers undertake a reconciliation between their GSTR 1 and 3B on a regular basis to make sure that there are no gaps which are basically missed out. On this note, we have one.
Just one last angle.
Yeah,
We see. I mentioned about the rectification of return. One thing is also not very coming out very clearly. Why is the government not linking 1 and 3B?
right.
That is another aspect which is not clear. Maybe I don't know, is that system issue or what? Because once you simply link 1 and 3B, there will be no option to not match 1 and 3B. It will automatically happen, right?
Right, right. But I think this provision in some way is going in that direction, right? I mean, in some way it is being taken in that direction wherein they do not want to have any gap between amounts disclosed in 1 and 3B.
No,
So
so
that,
no, you're absolutely right, but in a very roundabout way.
yeah.
Yeah.
Yeah. Okay. So just on this, since we are on 1 3B reconciliation, we have one last poll question for all the participants. Can we have the third poll question, please? Yeah, so the question, as you can see on your screens, is do you undertake a GSTR 1 and 3B reconciliation very regularly or on a need basis or not at all? Okay, can we have the poll results? Okay, so I think we are glad to see the results. I think 77% of the participants are doing reconciliation on a regular basis, so they don't have to be worried about this new amendment at all. And barely 7% of the participants are not undertaking a reconciliation. So I think this is definitely getting into your agenda on a monthly basis that we need to have a reconciliation. More importantly, from a point to make sure that there is no gap that I have disclosed a liability in 3B, disclose the liability in 1 and not paid it in 3B.
So also one addition is reconciliation with the books of accounts on a monthly basis.
Yeah,
That
yeah,
is also which is being done now very regularly by many companies.
right, right. Another change with respect to filing of GSTR 1 and 3B is that now there is a cap which has been, or a functionality which has been introduced, wherein if GSTR 3B has not been filed, then I will not be able to file GSTR 1 for the subsequent month. So, it's in a way supports what we saw the earlier on the earlier slide, that now I will have a situation where if I have not filed GSTR 3B, I will not be able to file GSTR 1 for the next month. So literally, there is very limited room left. Earlier, there were a lot of scenarios which were happening where only GSTR 1s were being filed by suppliers. The credit was coming in 2A, 2B, recipients were taking credit of that, but 3B was not being filed. So now we'll see a drastic reduction in that scenario. With that, we move to other changes which are in relation to, I mean, not necessarily related to ITC or returns. One important change that we have, which is in relation to power of provisional attachment. In the GST law, originally also we had powers of provisional attachment, wherein a commissioner could attach property of a taxpayer, including the bank account. This power was, in a way of speaking, limited up till now. The provisional attachment could be done. It was restricted for non-filers, for unregistered dealers, for summary assessments, or in case of show cause notices. Now, from 1st Jan 2022, this power has been widened significantly. And now these powers can be extended to all the situations. It includes assessments, inspections, search, seizure, arrest, demand, recovery, all the possible scenario where we have interaction or proceedings with the department. So there is a significant widening of the powers. Another area which has been included in this provisional attachment is that earlier the provisional attachment was applicable only for the taxpayer or the assessee. Now, even this provision has been extended to any person who is retaining benefit of a transaction. So, for example, if there is a person who is issued fake invoice and another person has claim benefit of that or retain benefit of that, the other person also will now come under the purview of provisional attachment powers. Uh, Now, looking at these provisions and how widely they can be used, Ranjit, what do you think? I mean, do you see that going forward basis we'll see number of cases increasing where bank accounts are being freezed? Do you believe that authorities will use these powers in frequent basis?
Ruturaj, I'm pretty sure they will. The power is there, and the tax department tends to be quite proactive in these situations, I must say. So I do anticipate quite a few situations will come up where we will have these provisions invoked, and we will, every now and then have to run to the High Court and get a sort of relief from the court, because that's the only way in which this provision can be dealt with. But let's understand this a little better, because it is a significant provision, and as the Supreme Court itself has called it, it is a draconian in nature, and the conditions which are prescribed, they should be done in a valid manner and in a strict manner as is prescribed in the law. So I think what we have to bear in mind is that Section 83, which we are concerned with, itself has a sort of inbuilt safety valve, in as much as it says that the authority has to have an opinion that for the purposes of protecting the interest of the government, there is a need for such provisional attachment. Now, these are very important and very weighty words, that there has to be an opinion that there has to be protection of the interest of the revenue. And in that context, the Supreme Court, in the Radhakrishnan judgment that it laid down, certain amount of or certain sort of conditions or aspects that must be looked at and fulfilled, so that there is a valid exercise of the power that is provided for in this section, as even now, even it's amended, even then, and that there is a safety mechanism that is adhered to, which is anyways the legislature had foreseen it and put it down into the law. So just some of them, what are the highlights of those? So the exercise of the power that is being made for provision attachment must be preceded by the formation of an opinion that it is necessary so to do for purposes of protecting the interest of the government revenue. Right? This is absolutely paramount. I mean, it cannot be that it's done without this. And in continuing that, so before the provision attachment is made, okay, there must be an opinion which is formed on the basis of tangible material. It cannot be on the whims and fancies of particular officer or on basis of hearsay. There has to be tangible material that the assessee is likely to defeat a demand or to be absconding and so as not to pay the amount, and therefore this opinion is reached. And that is when there can be said that it is for purpose of protecting the interest of the revenue. So that's the first most important aspect to understand. The second one is that such a decision to make a provisional attachment is necessary to protect the government revenue. And if you did not make that sort of decision and you did not have a provision attachment, the government revenue is going to be at a loss. And so that's the reason why that decision is taken. That's the second one. Another one which is to be understood is that the formation of such an opinion by the commissioner is based on tangible material bearing on the necessity of ordering a provision attachment. And it's not just he should have tangible material and therefore comes to such a conclusion. It may be possible, but that's not necessary, because you have to consider it in the nature or in the situation that we are concerned with the particular transaction or the taxpayer or his acts or his likelihood of not being available to meet the government demand. So that's a very important angle again. Taking the next one in that case is that there is a situation where there must be an application of mind, and that's where I think while the department authorities may look at this very often, this provision, try and invoke it, it's important to remember that it has to be judicious and it has to be with a clear application of mind. It is not perfunctory, is what I would like to emphasize. The further point is that, and this is how the Supreme Court has also sort of described it, is that there is dual safeguard and there's a dual procedural safeguard. So what are the dual procedural safeguard which is given to you is that you are entitled as taxpayer or the person whose bank account is being provisionally attached, is that there is a ability for you to submit objections on the grounds on which that this attachment must not occur. And next is there must be an opportunity of hearing after, of course, this is after the provision attachment has been brought in, but within a defined time span, you should have the opportunity of being heard. So this is the safety valve, which is probably the most important basis, which the ability to counter such a harsh measure or harsh step is provided for. So I think while it will get used maybe more often than not, we must have these principles very clear in our mind, so that when the situation does arise, we are able to combat it.
Um, Moving to the next amendment. So there are some changes which have happened in respect of detention, seizure, confiscation of goods, and conveyance in transit. Ritesh, according to you, which out of these are very significant changes? I mean, there are quite a few changes which have happened, but what do you think are most striking or changes which will have the maximum impact?
Ruturaj, all the changes are very, very significant. So earlier, what used to happen was the amount of penalty, in fact, it was not penalty, it was tax paid was 100%. And there was always a view which was taken. And let me tell you what used to happen and what is now going to happen. So let's say there is a conflict, your truck is going from Bombay to Calcutta and there is some confiscation in between. The truck is stopped. So you end up paying the tax amount, right? And then there is this entire issue of where do I need to file the appeal, because the truck is somewhere in between. There are situations where the taxpayer believes that since he has registration in the state, so he would actually adjust it in his 3B against his output liability, because somewhere the tax has already been paid at the time of detention, right? And
Right.
so at least the tax amount which was paid, that got saved in terms of adjustment. So you keep on fighting the appeal, etc. And there was definitely this question of where to file the appeal. Now what they've done is they've removed this as a tax amount. They've now called it as a penalty, which is equal to 200%, not 100%. So that is one big issue, that you have to immediately pay this 200% penalty if you're coming in forward as a owner. If you're not coming forward as a owner, then it is 50% of the value of the goods. Or so let's say transporter. In many cases, what happens is the companies say we do not have anything to do with this issue. It is your mistake. You handle it. So the owner never comes forward, and we have seen situations where show cause notices have been issued in the name of transporter. And then the question is, then who will file the appeal? Who will dispute the matter? Irrespective, what it says is that then the penalty is if it is not the owner, then but the crux of it is 200% penalty. Now again, if you are what it says is that a notice will be issued, and there are also provisions which are old provisions, that what happens in the case of exempt goods, where the amount is 2% or 25,000, whichever is maximum. But we have seen situations where at the ground level, department just doesn't bother about exempt taxable. They will just simply levy a 200% penalty. We've seen that happen. We have seen a situation where registration, I had a registration in the state in some other city. Still, the officer insisted, you take the registration in my city and made us pay the penalty. So all this nuances, and with this 200 penalty, this is going to be a very significant impact, because trucks are being seized merely because of typographical errors. It is not that I have not paid the tax. We've seen typographical errors and department sort of creating an issue on typographical errors. So this is, and also one more thing is this provision relating to sale. So if nobody is coming forward within 15 days, they can sell it. The provision on conveyance is a new provision, because earlier the proceedings which were applicable to the goods per se were applicable to the conveyance. So there was no separate provision. Now, at least for the transport community, and again 1 lakh is not a small amount, but at least for the transport community, they can pay 1 lakh and take back their vehicles, the conveyance which has got seized. But again, not a very small amount. And the last part is, there was no pre-deposit provision earlier under the law. Now you will have to pay a pre-deposit of 25%. Now, in most situations, we have seen 200 penalties recovered upfront. In most situations, they would not release the cargo till you pay the 200% penalty. So, we've seen a lot of e-way bill issues coming up, not because there is a problem with not because it's a wrong transaction, but because there are errors which are committed. So let's say e-way bill validity, I forgot to extend beyond the stipulated time period. We've seen confiscation happening on that front, because the transporter was on the road and there was no network, etc. no consideration for those kind of genuine situations where there is a provision for security, but I have not come across a situation where department has taken security in lieu of penalty. So this could have a huge impact where people have to be when I say people means it would either be the company or the transporter, because companies would want to outsource this function to a transporter, and transporter would always make a comment that it is not my problem, not my fault. So all those contractual liabilities. So one is obviously the legal angle on the GST. Another is also the contractual aspect between you and the transporter have to be defined very carefully in terms of what happens where such confiscation etc. happens and how to deal with this kind of notices. But quantum wise, it is huge.
Yeah, yeah. So also, maybe more rigor is required to be, like you mentioned, there are genuine cases which are beyond the control, but also maybe more rigor needs to be put in place for the manner of e-way bills are being raised or the documentation compliances. I think that's something which the taxpayers can do on their own. That's within their control. So at least that's one area where at most. I mean, that has to be complied in a very, very conscious manner.
So one disconnected issue, Ruturaj, I just wanted to highlight was that there is this entire issue of reconciliation between an e-way bill and a GSTR one. That is
Yeah,
also coming up very strongly. Many companies are not doing it, but it is strongly advisable that a mechanism is now inbuilt because of this entire fake invoicing, 132 issue where you have prosecution, where if let's say there's a goods invoice has been issued but goods not sent or otherwise, and sometimes department just picks it up to say that this is a fake transaction. So apart from is the e-way bill, other is this entire reconciliation also with e-way bill is important.
okay, okay. All right. Quickly moving on to the next one. We will not spend, now we are left with three odd changes. We'll not spend a lot of time. We are almost reaching our time limit. But Ranjit, there was one amendment which we saw particularly in GST Act, wherein the scope of supply was amended and rather enhanced. So can you quickly give some insights on what the background was and what this change really is?
Rituraj, I think this is probably a topic in itself, and we could have a session on this alone. It's quite a involved legal issue. But in the context that we are right now, there was a Supreme Court decision in Calcutta Club, Ranchi Club, etc., which concerned both service tax and sales tax in the pre-GST regime. Whether in the context of a club or an association, there should have been a levy of sales tax and service tax. Now, while that judgment came somewhere, I think in late 2019 or early 2020, I don't recall the date, there was a GST law which did not have a very clear-cut provision in respect of clubs and associations. And therefore, what we have on hand today is a retrospective amendment which has been made, essentially looking at that decision and ensuring that there is there is no loss of revenue on these transactions. The retrospective amendment has been brought in, which says that the activities or transactions between an association and its members for consideration would be made liable. Okay, so this effectively, neutralizes the view the Supreme Court took. It neutralizes the concept of principle of mutuality, which was the basis on which the Supreme Court's view was founded, and it brings to a situation where these clubs, associations will have to pay tax, will have to bear tax. The question is that this has come in as a retrospective amendment. What's going to happen for the past period? Is there a possible challenge for the past period? Perhaps there is a possible challenge for the past period, but then retrospective amendment has been made consciously. When in what situations would a court be willing to strike it down to say, this is not valid or this is invalid and ultravires the constitution? 9 times out of 10, I think we'd see a situation where the court would say, no, this is fine. The legislature has the power to do so. So then it brings to the question is therefore these clubs and associations going to be saddled with this particular tax and then interest as well? I mean, that's a sort of point which is going to evolve, whether there should be an interest implication on these transactions. I think it would be unnecessarily harsh and unfair as well. So perhaps that is something that would have to be taken into court and challenged.
All right. Now we will move to the last two changes quickly. One change that we have is with respect to power to call for information. The GST law originally contained provision where the tax authorities could ask for information, but these provisions were in a way limited to only statistical information. These powers have now been widened, and now the authorities have sort of been enabled to uh, call for information which may be required for any manner. It's not only the statistical information, but if they believe that some information is required for any proceedings, they have been enabled to call for that information. uh, so we may expect on a go forward basis that wider informations are being asked by the tax authorities, and as a taxpayer we will have to comply with it. There is one point to note here is that information which is collected cannot be used for any proceedings automatically without granting a opportunity of being heard. So that's a sort of safeguard which has been which is there in the favor of taxpayers. But in a nutshell, we may expect on a go forward basis more and more information requirements coming up from the tax authorities. And coming up, another procedural amendment which we have, this is our last slide that we are covering. So Aadhaar card authentication is something which is being introduced. So for three specific aspects, for three specific processes, one is revocation of cancellation of a registration, then refund application under Rule 89 and refund application under Rule 96 for IGST paid on exports. When we file these applications, now these applications will have to be authenticated through the Aadhaar registered number. Now for important point to note here is that for a proprietor, it will be the proprietor, for a proprietorship firm, it will be the proprietor's Aadhaar card. For a partnership firm, it will be any of the partners' Aadhaar card. But for any company, the authentication will happen through the MD or any other director's Aadhaar card. So this is something which is going to be a new process, which we have to be keeping in mind when we are going to file any of these applications. And I think refund application is something which is routine for most of the taxpayer. So this procedural change has to be kept in mind when we are planning for any of the refund application. So with that, this is what we wanted to cover during our session today. We have quite a few questions. What we will do is we'll try to take as many questions as possible in the time that will be permitted. And any questions that we are not able to answer during the session, we will reach out to the participants through an email response. I'll just look at some of the questions. So we have a question from Shruti Vasani, which says that should we not consider to be on a cumulative basis as a solution to a time lag issue? I think this is something which Ranjit, you touched upon, but maybe we can just quickly give a comment on this.
Yeah, I think that it does make sense. The fact is that the 2B will be a static document, and in a way, therefore, as at the end of each month, the return when it's filed from the vendor side, it would update and populate and populate into your 2B, and it would make. I mean, it makes complete sense that it be looked at as a cumulative basis. So that's the solution that you're saying for a time lag. But the fact is the time lag has happened, and that's then how you see the cumulative entries to make a response to the fact that there is a time lag. But the time lag has occurred, so it's a matter of post facto.
Right. Right.
Practically, just to add, practically what would happen is, let's say my understanding of time lag is that delayed entries in the books.
Yeah.
Right. Now my 2B has already occurred, right? Let's say instance of 2B has already occurred by the vendor, which means that my right to take credit arises the moment I pass an entry. Now, the only question is, I was talking about reverse integration, and we had discussions with a few clients on this. Can I build up a system whereby my 2B gets incorporated in my ERP, and whenever I do entries in the books, either before or after, the credit gets triggered. It's not difficult. So it's whether cumulative, whether individually, it is about it's like a bank reconciliation. Your bank entry has arisen. Now you can use the money. Now whether you do it quarterly, you do it 6 monthly, because if you do it cumulatively, obviously your credit will get delayed. So you have to build a mechanism whereby every month to be is incorporated. The moment there is an entry which matches, credit should be taken, whether it is together, whether it is after 2 months, 3 months. Practically, how this would work.
Right, right. I think there's one more very practical question, and I think we've seen when we do monthly compliances, we've seen this happen very often. Is that the question is that if because of a technical glitch we are unable to see an invoice in 2B, but the supplier has provided a screenshot of GSTR1 filed by him, can we claim credit?
See, you can technically speaking, you can claim credit, but I'm not very sure whether this can now happen. Have we come up? The question is, have we come across these instances recently? Because what could have happened is he might have given a wrong registration, or he might have given a wrong number. Assuming for a moment that this technical glitch happens, legally you are entitled to take credit, and you will have to prove to the authorities that my GSTR1 by the supplier has been filed, because my substantive provision says supplier has to file the returns. My 2B is a rule, correct? So I have
Right.
already, and the provisional law very clear that your procedural conditions cannot lead to denial of credit when substantive conditions are satisfied. So if you are able to prove filing of return by the supplier, you can take credit.
Okay, okay. Then we have a question from Rohit Goel, which says that this is about the section 75. The question is whether the instruction issued for SCN provisions as per section 75 for recovery of self-assessed tax is applicable on SGST officers as well.
Yeah, so I think this was touched upon that it's an instruction from the central board. We've seen situations where the state officers are quite, or the state formations are not necessarily fully subscribing to what view has come out from the central formation. Nevertheless, it is one nation, one tax. But I don't think what will be possible is for an SGST officer to on record say I will dishonor it and I will not agree with this. That will not happen in a formal way. If it happens, it will happen in an informal way, which means that it will become that much more difficult for us to be arguing this before a court that look, here is an officer who is not willing to take the instructions which have been given to him, which are binding on him. So it will have some sort of difficulties that we will have on a very real practical level. But the hope and expectation is that this will not happen. At least I will continue to hope for that.
Right, right. I think, can we take one more question? I mean, there are quite a few questions which are unanswered, but can we take one question and then I think balance question we will get back to the participants through email. Yeah, so there is one question I think we did touch upon, but I'll still take it. The question is, can we take ITC on import IGST payment if bill of entry details is not appearing in GSTR 2B?
Why don't you answer that?
Yeah.
Sorry, go ahead, please.
Yeah, I think this is something which has been happening very regularly. That recently, in fact, for example, for the month of November, none of the bill of entries appeared in GSTR 2B, or partially bill of entries were appearing in GSTR 2B. So this is something which is happening, and it has happened even in the recent past. And I think it would be safe to say that if you have a bill of entry in your hand, if you have paid tax on it, you can go ahead and take credit. In fact, there have been clarifications in past which have which have mentioned that this two-way matching is not applicable for import credit, RCM credit. Like Ranjeet mentioned, we may expect similar clarification to come out now, but given the logic as to what two-way reconciliation is meant to be, it is essentially meant to be for the domestic supplies and not for imports. So if there is a bill of entry which is there available with you, even if it is not populating in GSTR 2B, I think it would be safe to take input credit on that.
Just one more quick question, which is update on 6A for credit or ISG distribution.
Yeah.
because this is related to the issue that we are discussing. In my view, all these provisions would equally apply to ISD in terms of annexure 2B, etc. So if there is, I don't know if there is, Ranjit, if you have any thoughts, but your annexure 2B, etc., you will have to also match at an ISD level. It doesn't only at the company level, registration level.
That I don't think there's a different approach there.
Yeah.
Okay, so I think with this, we would like to thank all the participants for giving your time and participating in this webinar. I hope you are able to get insights on the recent developments. If there are any further questions, we are happy to receive emails from you. We will reach out to the answers to the questions that we could not take during the webinar. So thank you, everyone.
Thank you, everyone.
Thank you.
लाइव बंद हो गया रुतराज